What up? What up? Oh, I guess it's 8 o'clock already. 8 o'clock in New York. Let me share my screen here. Entire screen. Good evening, everybody. I see the familiar faces who show up every day and the ones who don't. I know who you are. I'm watching. Okay. So, what are we going to do today? Let me pull up my first slideshow. I think I'm going to get into extensions here, basically a little bit of fib work. And then once we get into that fib work, and we're just going to go back over the old rule sets. So extensions. Who here has felt like they've mastered extensions? I think it's probably one of the harder. That's why I've saved it for last. It's one of the harder things to learn about extension. Actually, this is the wrong slideshow. Here's this slideshow. Got a couple for you. All right. So in extension long, this is a rarer trade, but if I were to pick one setup and only one setup to trade, and I didn't have a lot of time, I would do extension longs on the daily and hourly. So if you find yourself wanting to swing trade any market, this would be the move I would trade. So an extension comes after a traditional has technically completed through its negative 23% profit target. As soon as a traditional completes through a negative 23% profit target, extensions can begin. Extensions can begin. Now, there's extensions that happen intraday, which are a little rare, like little less reliable. Anything intraday is going to be less reliable. And then there's extensions that occur on higher time frames, like the hourly and daily charts. And those are much more reliable. And those are really my favorite setups. When you're trading the hourly and daily charts, you have much more time to basically let the move come into play. Okay, so an extension long, and then it's obviously, if we were to invert this for extension short, so you can just change the language around. But the extension long begins after a traditional completes through its targets. And they can, like I said, begin as soon as we complete through the negative 23% profit target. If I'm going to be drawing intraday extension anchors, and an intraday extension anchor basically refers to the anchor where you begin your draw is starting that day. It's not starting from last Tuesday or the prior day. It's starting from that day. And you only have extensions in extremely aggressive trends one way or the other. I'll try to find an example here later. But so I'm a little more picky with my extensions intraday than I am with my extensions that occur over the course of multiple days. If they're going over the course of multiple days, they can begin as soon as we go through a negative 23. The other thing to be aware of is if we're completing a target on the negative 23 over a higher time frame, it's typically a larger target. You're only going to have like an intraday ES target of, let's say, 25 points. Sometimes a little bigger if the ranges are big, but you could have a higher time frame halfway back where the negative 23% target is, let's say, 70 points in the ES. So that extension is going to be a little different than an intraday one. So intraday, this is really the rule from there. I only like to draw extensions after we've completed through a negative 61. That's just when you're going to get better results, or if it's the same anchor new high. So I realize I say all this and then I read my slideshow and I'm like, that's exactly what I just said. I don't want to double cover it. But once again, if it's through the negative 23 on a higher time frame, you can draw it. If it's intraday, look for it through at negative 61. Every series in every market follows this sequence in some form or fashion, on some time frame. This is like the algorithm to the market, in my opinion, is just this form. Okay. If we're not trading inside of a technical pattern, the market probably is just moving sideways. Extensions is they're drawn when in aggressive moves, and then the extension is in an aggressive move. If it trades, it's typically going to complete its target the same day, or the extensions complete very fast. So we have to think about like the nature of an extension. Let me pull up some live charts here. Here we go. Okay. The nature of an extension is aggressive price action. So let me find like a day. Like we really haven't we've been in a consolidation for the last few days. So there isn't great examples in the last few days. So I'm going to go a couple days back. We're going to go 20 days, 20-day 5-minute chart. When the market is trending, if you think about the nature of like a traditional versus an extension. So this is a hard reversal. This is Friday, October 17th. We come into a traditional. Okay. Now, a traditional is a 50% retracement from the low, right? An extension is like basically a retracement from a high. So that's the major difference between an extension and a traditional. A traditional, you have this low to this high. Let's say it's 100 points. This is going to be 50%. When we are in extensions, we're drawing from a high. Okay. And you can see that is a more aggressive move. Now, here's a perfect example. We have a traditional that completes its negative 23. Ideally, in this setup, what we would be looking for our next potential entry would be this next halfway back. And if that were to trade, that would be a viable setup. But then what ends up happening is the market is stronger and it is too strong to pull back into its 50% retracement. This is the negative 23. We move above that negative 23. And as soon as we move back above that negative 23, after failing to get back down into this move, there's computer programs that come in here and they begin taking this high and they draw it to every new high as we make new highs until finally, this is how these computer programs work. They engage the anchor here once we make a new high. They put a bid at the 50. We make another new high, they cancel that bid, they move their bid up to the next 50. We make another new high, they cancel that bid, they move their bid up to the 50. Once their 50 bid is filled, so their order, their bid, I assume their stop is at the 61. They're probably using different variations, and their target then becomes the negative 23. So the traders that got in here that are automated program traders are getting out here. Now, in this case, we immediately bust through that extension, and the people that are fast enough, or the programs that are, running the these programs that run this stuff have way more sophisticated data than I have access to. I would love to know what they have, but I can only speculate. But what I can see is I can see their footprints in the price action, and that's how I've been able to like back engineer all this stuff. Immediately, in this case, we go double ATR up, yellow bar, into a new high. All time frames at this point in time are full speed ahead. We go into a new extension. That extension trades. That also blows to its negative 100. And then we go into a new extension. That extension trades. Here, it's 38. And then in the overnight session, we end up breaking it. And then that sequence is simply over. Now, when that sequence ends, what I will do, let me just back up here a little bit. So we went, just to follow this sequence over again from the beginning to end. This is how sequences go. We have a large reversal out of lows. We're in a downtrend. That downtrend flips. We get our 50% retracement. The 50% retracement completes targets quickly within 24 hours. And this target is, let's see how many points it is, 4,000, 24,000. That's basically 24,700. And the target is 25,080. So it's a 380 point target in a day. This is like $7,000 a contract. We go through targets. We go into a new extension. That extension completes. We go through targets. We get a new extension. And that extension, basically, this is where we get our rule set. You can see you buy, you waited 25 minutes. We're doing nothing. We get a retest. We do nothing. We do nothing. We make one new high. We liquidity sweep, and then a full separate series begins to the downside. But what I will always watch is when the most aggressive extension breaks, like in this case, it does. Okay. This most extension, I immediately drop to the any previous anchor that completed a negative 100. We have two of them. And those are both setups I will look for. You see this extension in the morning, the highs are basically the negative 100. This extension is also at its negative 100. So I will immediately go to and draw up both of these setups as potential supports. Now, I don't know which one's going to work. There's no way to know, but what I will do is I will treat each one of these individual setups as a potential and just respect them and let the market tell me. So we trade it, we get a small rally, and this is all overnight, so it's very slow. We traded once, we rally like, was that 25 points? Okay, it's $500. We traded again. Looks like we rally a little more. We traded again at 6 o'clock in the morning. We rally more. Now, by the time we're opening, we've already traded this 3 times. So it's most likely, because we're going to have a time frame shift off the open. Okay, the market is opening. It's most likely that if this trades the 4th time, we're probably just going to test the next level of buyers below, because these level of buyers are already exhausted. They've placed their order once, they've placed their order twice, they've placed their order maybe 3 times, and they really haven't gotten far. We haven't gotten above the opposing short. The opposing short was still holding. So that's not good news for them going into the open. But we're aware of, understanding these sequences, that while those buyers might be exhausted, if we go back to the last extension that traded to its negative 100, which was this anchor, and we draw it to the new high, what we're going to then do is we're going to say we have 2 new levels of interest. 2 new levels that you are looking to trade, and the only thing we can do is place those limit orders and then manage the risk using the average true range and our time in the trade. The first trade goes off here at 9:55. 25 minutes later is 10:20. That's basically this high. Okay, it's the high. We fall straight down into a retest. 25 minutes later, we're back on highs. We've swept through the open, and then we pull into a next traditional and roll. Okay, so then we're inside of this extension. This is the extension in control. Now, that day, this extension doesn't complete its target. We go into the next day aware that the support is there. We traded once at 9 o'clock at night. We failed to break through highs. We traded again at 7:40 in the morning the next day. We failed to break the previous swing high. We come down in the morning again. Okay. We don't quite get to the 50. We run up. We absolutely stick. This day, I don't know if you guys remember this. I actually got short right here. We stick this midpoint. I ended up covering at this 50%. But when we break this, when we officially break this extension, which happens here, The trend then flips into traditional. So that's the end of the long trend. Sellers step in, they drive it to targets. We end up having our next traditional here. This was a wild candle. And then we go all the way down. Okay. So that's just like a real world example I wanted to give you guys. It's one thing to teach in slideshows, but it's a little easier sometimes to show you guys on the computer. This series. Now, is there any questions specifically related to like what I just went through over here? Because I know this stuff can be this is all of these lessons are things you can watch twice. I know you guys come here, you watch them live, but they're things that you can definitely watch twice and probably pick up on something that you didn't pick up on initially. Go back to the slideshow here. Okay. Oh, spelled that one wrong. Okay, so how to draw an extension. The anchor is always the previous major high, where the 50 came out. And the entries, this is what's a little more complicated about extensions versus traditionals. In traditionals, which is a low to a high in a long sequence or a high to a low in a short sequence, traditionals only have entries at the 50% as far as how I use them. Extensions can be both the 38 and the 50, as you just saw in the example I've given you before. But the target I always use is the negative 23. There's rarely circumstances where I use targets greater than the negative 23. But extensions, once again, they start when the traditional is blown out of profit targets. So the purpose of fibs and you'll be your goal with understanding the way I use Fibonacci sequences and to begin coming up with your own interpretation of things and how they work is you're ideally what you're looking for with your analysis of Fibonacci sequences is determining levels of support or resistance in which you can place an order and not get stopped out like more than 50% of the time. So you're looking, we're never going to know how good the reaction is going to be until the reaction comes. There's always trades you're going to feel better about. But you really can't let your confidence get too high in any given trade. Your biggest losers will come after your biggest winners. But by understanding fibs and combining it with like some of the other things I teach you, it's an entry tool. And there's more than one way to really use it. There's more than one way to use it, and there's typically more than one fib sequence in play always. Okay. So sometimes I might have a draw, but there's another draw in play that somebody else might have. And it doesn't mean, the only way to find out who's more right is to let it play out. Okay. So just some examples of some extensions on the daily chart. This is if you were to swing trade, if that's where you wanted to move your trading because you don't have the time or you just prefer that time frame. This is the setup I would look for. And you would need to trade more products than the ones I trade because you're looking for a very specific setup. When you're looking for a very unique setup, you can over a higher time frame, you can trade more products. This extension setup takes like 2 months to create because you needed the halfway back, which traded here in October. This is not this year. This is a few years ago. The halfway back in October. Then we run through targets in November and then pull back mid-November. But this setup here is a risk one to make 6. So if your stop is at the 61 and your target is at the negative 23, and you're like, hey, this is the only setup I'm going to take, you're making 600% return on your risk. So that's another thing that you don't understand about trading. What is your return on your risk? If your risk is $200 and you're returning $1,200, you're 6xing your risk. And extensions, when they're done properly, because it's a very aggressive setup and aggressive trending markets, you need an aggressive trending market, number one, which we don't always have. There's always in a market that isn't an aggressive trend. Right now, it's natural gas. And I'm going to show you guys how to find aggressive markets on multiple asset classes here after we get through this. Okay, so we have this is on a different time frame. This is a beautiful traditional. The quicker the traditional completes, like if we can get a 48-hour traditional completion, so you can see this trades on Monday, by Wednesday it's completed. That's a good indication that we're going into an extension sequence. So traditional, and then boom, we go into an extension immediately after. Is the recommendation question here? Is the recommendation to close a trade if an extension doesn't complete within the day time frame, even though it could complete tomorrow a few days later? Do we keep track of the levels as the days pass? Yeah. So I mean, if you're day trading, you're closing the trade, right? You're not carrying that into the overnight session. Um, I unless my plan is when entering the trade to swing it overnight, I'm not holding that position overnight. Now, if you enter the trade, Kunal, like yeah, I know, like some people here, like most people here, probably have jobs that they have to work all the time. But if you were looking for this specific setup and you had this specific setup in your tool belt, and upon the entry, you watched the traditional complete the negative 23, you set up, you drew the extension, you waited with your limit, and once it filled, you already had planned that trade out to run two targets, then that's how you plan the trade out. You can also do something that's what's called a multi-bracket order, which is when you trade contracts in multiples of two and you take half of your position off at a shorter target. So I recommend if you do plan on trading that strategy where you're holding overnight, whether it's even if it's micros, you can do this with micros with a few $1,000s in your account. You don't need a ton of money to do this, but and you could dedicate me even like maybe even a section of your portfolio to trading this setup. And this will work on stocks too. What I would do is I would take half the position off at the opposing 50%. And then you're automatically locking in gains. You're automatically locking in gains. But if you're day trading, you're just really treating the support levels of the extension as levels to trade off of. And the extensions that are going to complete the same day are probably extensions that are triggering before 11:30, and that in the indexes. It's been a while since we've had a really aggressive extension market in the indexes, but when it's hot, it was going for a while in gold. When gold had that, I mean, gold's kind of broken its very aggressive uptrend. It's in like a consolidation now, but the stream aggressive move that we had in gold, it was like literally extension to target, extension to target, and extension to target. And when a market is hot like that, you have to be aware of that and be willing to be aggressive in that market. Here's an example in the NASDAQ, traditional. Now you see we get close to this negative 23, and then it isn't until we pop above it. Once we pop above it, this extension begins acting as support. Okay. And then in fact, we retest it twice before completing. And each one of these separate moves, like tradable, right? We come close to targets, we fail back down, we trade that 38, we go to targets. So it was the 50 new high, 50 new high, 38 negative 61. And this was, of course, over 3 separate technical trading days because it was Wednesday, Thursday, and Friday, of which this gave all different entries here in this extension sequence. Here's the euro, nice clean traditional. Now you can see this one totally blew through targets. That's a beautiful begin of a move. This is what you like when you see a traditional really go through targets like this, that extension, money. Now we trade here. You can see we trade that target and then we just faltered off. I don't know what we did after that. I don't know if I have it in my slideshow. Looks like I don't. And once again, these are different markets you could trade. If you're looking for just this setup, I'm going to go over nat gas here at the end of this traditional to extension. You get it. Traditional to extension, target hit, Traditional. This is a little different. This is a super fast traditional. So this must have been a news event. Whippy into an extension. Like that is what extensions look like right here when they trade. Traditional into an extension here. Okay, these are just examples. I can go over them all day long. But what I want to do next, I show you guys a little something I do. So I have this. This is just a futures watch list. I think I can share this. Futures too. So these are all the futures contracts basically that are like tradable. Well, there's actually more, but these are like the big ones. Like there's like coffee and like random things you can trade too. Question is, how do you determine when you do an extension versus a next measured move? So intraday, if we go through a negative 61, you can draw the extension. On the higher time frame, as soon as we on the hourly time frame and greater, if we go through the negative 23, you can begin drawing the extension. As long as it's in the direction of the higher time frame. I don't really draw extension shorts in the indexes. And like they'll happen same day, but like once that there's just very few instances, if any at all, that we actually complete extensions. Like this only happens in bear markets. This is like maybe the one example here in all year that we had pretty aggressive extensions. And I don't remember what the anchor was. You could probably go back to my videos, and it was in my videos. If you wanted to go back to my videos from, was that February? But very rarely are we having extensions to the downside. I mean, actually looking at this, I do think this is the anchor here on February 20th. It looks like it traded here and then here. And that was probably it. Oh, then here again, actually. One last time. But that's a clear trend to lower. So, and then the other thing is if the extension breaks, draw the traditional, because what we're doing is they're both potentials, right? They're both potentials. Like here, okay, here's a good example in the NASDAQ. The NASDAQ the other day had a very aggressive traditional short. Now, we hit the negative 61, but realistically in this type of a market, so you had this extension here trade. Okay, and it reacted, but then we broke because we didn't take out the prior day low. We're basically held it as support. So a lot of times if we complete down to a negative 61 intraday, and like I'm not my higher time frame is not bearish. I'm thinking that that extension is above and I'm anticipating it to break. And we broke it, and then we came into the long. It was a little sloppy, but that's what completed today. Now you could have drawn that next traditional as well. It traded right here, and this basically blew all the way out. And then we came into that full halfway back short. So it's the thing is that's why being aware of that higher time frame, like if you look at the higher time frame here, it's up. We're like 1 day off an all-time high. If we're 1 day off an all-time high, are you looking for the next short after we just held low of the day? And that's contextual awareness. Like what you'll notice is the shorts right now, once we complete those targets, we just snap back up into the full halfway back short. We're not getting like a next series down, because the next series, there's like a little bit of sellers, but is there enough sellers to make a full new low? You have to think about what that fib is going to look like if it completes. Like, are we just going down to lows? Like this halfway back short just took us down to lows? Or are we going to trade another halfway back short and take out the prior low of the day and begin a larger downtrend? It's that there's not like that's where it just there's not a perfect answer to that question, Landon. I would say only take extensions in the direction of the higher time frame bias period. So when you enter into a day, if your higher time frame bias is not short, do not take a short extension even if it appears. Miss the trade. If your higher time frame bias is long, then sure, you can take an extension to the upside if the market calls for that. But only take extensions in the direction of your higher time frame bias, and you need to know that at the beginning of the day. Otherwise, just look for traditionals in that direction. Okay, what was I going to go to? Oh, where is it? Okay, 1 second. More extension examples. And one thing you can do to get yourself good at this is go back and look at like any series where you can observe these things and then try to find things out that you like. So like in this case, we have a Russell traditional. This first traditional breaks, okay? It's common, especially on the first move. Break is 61. We immediately blast through targets. You see the strength of this move? Take out previous daily highs, big expansionary bars. That's going to be picture perfect, okay? We complete that negative 61, same anchor new high. Come down, complete a negative 23, same anchor new high. This is for the third time. Complete a negative 23. I mean, when you find an anchor like this is so profitable. If you can identify it in real time, even if you missed the first one, forget it. You missed a traditional, you see the extension, buy it. Once to target to a negative 61. Twice to target. We end up running all the way to negative 61 here too, but 3 times, okay? 4 times in a row. Just like ping pong, ping pong, ping pong. And then we have extension to extension in this case. Now, the thing about another characteristic of an extension, a same anchor new high grows, meaning its target actually gets larger. If you have traditionals, their targets typically are getting smaller. That's just like the math of them or the geometry of these setups. So I'll give you like an example. So if you draw this low to a high, you actually just clear these drawings and make this a little easier. So if we draw a low to a high, okay, and we complete that target. This target is 24,970 to 25,200. So it's like a little over like what 230 points. It's a 230 point target. Now, if we were to come off of this traditional, we didn't, but if we were to come off this traditional and pull back into this 50, this target is 25,070 to 25,270. So the target is smaller. This target would have been 220 points. This target would have been 195 points. And then let's say if we would have drawn, if we would have come back into that traditional, this target would have been, measure it, 150 points. But you see how traditionals will gradually get smaller until eventually they'll break versus an extension, same anchor new high. they get bigger because the draw gets larger. Traditional draws get smaller, assuming we're coming off negative 23s. Extensions grow. Extensions grow. So that's just like some mechanics of the market you need to understand. And almost always in the indexes, like just look at them. They go up. Okay. They only go down to go up again. That's it. There's not really anything that just keeps going down. So let's go to gold here. This run up in gold was like all extensions. And that's the type of action in a Super Bowl market that you'll have. This is like if you can recognize it in real time and see that a market is hot, like gold was, and you just trade it till it stops working. And then like one day like this, gold's down 300 points, and you're like, well, that's probably it for now. But in the meantime, this was just move after move after move after move after move, just printing right to target very quickly. Okay. So these are higher time frame extensions. So we have this extension here in the Russell. We complete this target. When we draw that same anchor new high, gives us our new buy zone. Once again, we're treating these 50s here, this 50 and the 38, they're 5 points apart here. They're different trades. They're different trades. We don't know which one's going to work. Okay. And then you would treat them both as independent support levels that you put your risk around. Yes, this was the same sequence. Traditional totally blows out. This is what the start of every bull market looks like at the end of a bear market. By the way, if you go back and study the major lows, if you ever like just want to do chart work in your free time, try going back to the major lows that we've had in any given year and finding the sequence out of it. And you'll get better at recognizing this stuff. So go traditional to extension. That extension trades 50, front run, retest, bounce, 61, rip. And then you see the size of these candles. You go from overlapping price action to expansionary bar, expansionary bar, expansionary bar. And then you see that once again, this is a higher time frame. In this case, Landon, when you say how do you determine an extension versus a next measure move traditional, our bias here is up. Higher highs, higher lows on the daily. So we draw the extension as soon as it goes through the negative 23, because the other thing that we need to consider is that this is over the course of multiple days. Okay, because this is the anchor is Monday, the completion is Wednesday, the pullback is also Wednesday. If this was like the same day, we'd be a little weary about pulling that next extension. We complete this target. We go through negative 61s. Once again, expansionary bars. The market is seeking value higher. The path of least resistance is up. The new extension begins. In this case, we run directly off the negative 23. So we run directly. You see how we don't peak above there? And that's probably just less than 24 hours. I think that's maybe like 23 or 22 hours later. So it's actually not a full trading day. We come right off that target, same anchor new high, 38.38, front run of the 50, straight up to the negative 23. And then, oops. And then we actually have another extension, 38 bid. That day is Monday. You treat it as support, get a couple points off of it. Day closes. We come back down. The 50 trades overnight. We come back above. But what you'll start to notice is we're not taking out the previous high. We're staying below these swing highs. The market's getting weaker. And then finally, you get that liquidation. You'll see when you get these breaks, it's no coincidence that they're breaking right on these levels. The biggest breaks are gonna come when trends fail. And this is right here is a trend fail. Okay. And then other programs, they're aware of that trend failing and they're just, it's stop below the low. Then the next guy's got to stop below that low. Then the next guy's got to stop below that low. And then we go basically all the way back to this base here, which if you look right is where we stopped. And then what ends up happening is we go all the way down into the first extension in this case specifically. So we'll go over that whole sequence again. Traditional blows through targets, into an extension, blows through targets, into a new extension, blows through targets, into a new extension, completes targets, same anchor new high, completes targets, same anchor new high, same anchor new high trades here, bid, same anchor new high trades here, bid, trend failure, the trend breaks. Now, when the trend breaks, what we can do is we go back to the previous anchors that worked and anticipate that there might be buyers there as well. So I go back to the first extension in the series. This is what began the whole move. Okay. And you can actually see we traded on that day. So that's the 61 break. This is just a different time frame. We trade to the 38. We run all the way back to highs. And the market basically consolidates for a few days until finally we trade down into the original extension, the 50%. We close on it that day and it's off to the races. There's one more test of the 38 and then that target completes. So keeping in mind, especially on the higher time frames, these big draws, like this draws target in the ES was like 80 points or so. That was a huge move. 80 points is a big move. Takes a few days to complete. And also, the way we confirm that the support is going to work is by breaking the opposing move. We break the opposing move and we come back down. Now, this 38 is probably also a combination of a traditional from the low of Tuesday to high. I can just tell by looking at it. Once you do this enough, you'll just start seeing these things without even drawing them. But drawing them, drawing them obviously gives you the exact mathematical level. Okay. Traditional trades, we blow through targets. What's the next move? Answer in the chat. We trade a traditional, we complete the negative 23. The traditional trades on Tuesday. The completion is, or I should say Thursday. The completion is technically within 48 hours, 48 trading hours. So it's Monday, but it's within 48 trading hours. Extension. The extension trades, it's 38s here. We make a new high. We come back down. We fill the 50 and complete targets. Now this actually goes into a new extension here. This extension actually trades. I don't have it drawn and this isn't an active grid, so I can't draw it. But if you were to take this high and draw to here, it trades here. We bounce and then fail into it again. 38, bid, come back down, one more test, completion. So that's why when we're drawing these, it's just giving us a point of reference, okay? A point of reference. And then once again, once we complete, we draw it again and we anticipate the market to move down here. A lot of times, like if I'll go back a few slides, when we have these, we haven't had one in a while. We might actually be building one right now in the indexes, but like this multi-day consolidation where we can't take out highs and we don't take out lows, what always happens in these moves is we'll finally get a push lower. Well, all this does is it's tricking traders. You have to think about the psychology of this as well. We take out a multi-day consolidation. This is like a 10-day consolidation. Everybody long that has weak hands is selling their position. And then there's even shorts getting aggressive into the close. So it puts everybody off sides. When traders are put off sides, you typically get violent reactions. the next day. So the best setups in extensions are extensions that have multi-day consolidations and then finally trade. I'll see if I can find a recent example here of this, and then we'll go over some other rules. Try to find one. Okay, so I would say it's like right now, this ES is inside of this extension. We traded the 38. We've traded the 50 once, twice, 3 days. We're coming on the fourth. Tomorrow, if we start losing this, what do you think is going to happen? If we lose this extension, we're going to get a liquidation. Now we need to be thinking about where we could get the liquidation down into. What do you think here in this current circumstance, if we break this extension, would be the next ideal fib support that we would shift down to? Traditional from the swing low, yeah. So I would begin drawing this Wednesday low to high, and this will be in my trade plan tomorrow. I don't know if it's going to trade, but if we lose this series of buyers, the accumulation from here, these traders are going to need to get out of their position. Now we very well could hold it and be at highs tomorrow. I don't know. But we are running on a fourth test, and if we start seeing selling pressure tomorrow below this low, which I think is very on par. Another thing you'll notice is what have we had here on these highs? Lower high, lower high. We're starting to see participation on the full halfway back shorts, which is evidence that sellers are stepping in. They were stepping in yesterday, stepping in here again today. That target's going to be down at 68.82, 68.28s. Okay. So when we get down to 68.28s tomorrow, if we have a liquidation break, we will have completed the short target. So anybody getting short below that, I think, is really offsides. And we will be coming into this buy zone, this next traditional, where a whole different set of buyers will be waiting to buy things. And they're not only buying the S&P, they're buying things like Google, Apple, whatever, the big boys. Okay. And then we have a jobs number later this week. So for us to sell down into this, going into the economic event that is anticipated to be the bigger market mover this week, that's going to give the fuel back to the upside. So we're mapping out things happening before they're happening. So going into tomorrow and even the rest of the week, we'll set an alert here, and I'll know that if we get down to the 68.22s, this is where you start planning out bigger trades that you can hold for multiple days. If we trade this 68.22, you need to start thinking about what's the market going to look like 5 days after that. That upside target will be 7,000. So that is 180 points. That's like $9,000 a contract. And if that's the style of trading, like, I will do some swing trading where I'll take separate positions that I can hold overnight, because I'm already anticipating that if we hold this level, that the market's just going to go back to a new all-time high. Unless proven otherwise. We could very well break that, but that's still a valid setup. And I don't know that it doesn't work unless I'm proven that it doesn't work. And you have to take the trade to find out if it's going to work or not. The other situation, I mean, even if we get like maybe this full halfway back eventually all the way down here, which could happen, 67, 61s, that could very well be the case. Do we just wait for that level, or is there something to short into that level? Good question. So, um, we can examine the sequence lower here, and so tomorrow you can be aware of, I don't know where we're going to be tomorrow when we open. We very well could have already taken out all of these lows. If we're taking out all of these lows into the open, then no, there isn't a setup. If we open up tomorrow, I'm gonna get rid of the extended session, and we're kind of still dilly-dallying around this level, I'll take the halfway back short from Monday's high to whatever tomorrow's low is tomorrow. Let's say tomorrow's low off the open tomorrow's low tomorrow, does that make sense? Is 68.46 in the morning. And then we stage a counter trend rally. There might be an opportunity to short this, but I just don't know. I don't know until it presents itself. So in the overnight session, it looks like there's its own sequence right now, which won't exist when we open tomorrow. As soon as this session opened here at 6 o'clock, there was this traditional that traded here and then just totally blew through targets. And then we're actually in an extension short right now. But this series is it's a totally separate series. So if this extension short completes right now, we could draw that same anchor new low. So let's say there's two possibilities now. We complete this extension short. And if we complete this extension short, it's going to complete at our support that's been holding. So taking that next short after the extension completes, especially if we come right off it, is a little risky. I don't know if that's something I'd want to do because we're trading supports. I don't like to take the first extension after trading that support again. But this would be something to short. So tomorrow, if we're down at this negative 100 at the open and this extension anchor is held all night, this will be the trade tomorrow morning. But if we're fully past and down at these bigger targets, that trade is kind of over. It's whatever trades first. If we trade the support before the extension, we take the support. If we trade the extension before the support, we take the extension. If the traditional takes longer than 3 days, are we thinking to keep shorting until we hit that traditional halfway back? Are you referring to this traditional short? If this takes longer than 3 days?
Trying to think. Going from so the short that's occurring now, right? Like we're hitting the lower 50%, but say that just drags out another 2, 3 days.
Mhm.
In the interim, we just continue to consolidate. What do we do?
So in each one of these cases where we've traded this low, the trend has changed on the smaller time frame, and there's been just entries back up. And I guess the what if we do question is it's so hard to answer because it's so dependent on the action. So here, like we trade into the traditional long and then we like immediately reversed and then there's your halfway back long and then we just go back to the highs of the range. So like right now my trade plan would be I'm going to assume that this is a range unless it's broken cuz I don't want to bet on anything that hasn't happened yet. So ideally, what I would do right now is if we completed this extension, I would look for a traditional a next extension break. I would look for this move to break, and then I would just start trading longs again. That's how I would trade this. But if tomorrow, if we get back up to this 6902s, this halfway back short again, it also lines up with my thesis that we are inside of a range, and I would be willing to short this again. They're independent trades. The short at 6902 is an independent trade of a long down here. So there's no right or wrong. It's just if this trades, we'll look for a long, and if this trades, we'll look for a short, because right now we are range trading. If you looked at Perry's levels today were freaking spot on, and actually wanted to go over that. So let me flip to another slideshow I built here today. Yeah, so that's range trading. And if you look at the SUT momentum, let me actually see what it is. I don't know what it is right now. I'd have to check what the indexes are rating right now. We are negative 3. We're -8 on the NASDAQ, and we are -10 on the ES. But what you'll notice is most of our down move is on the smaller time frame, the hourly. Actually should be hourly. I have this wrong. Still -5. Okay. Yeah, our momentum indicator is leaning lower here. So with that being said, if these numbers are the same tomorrow, like I will be looking for potential shorts off of this level. But it's a range until it breaks. And if it breaks, if the range breaks, we assume we will go down to the next level of like true value, which is that traditional below us I mentioned at 68.22. And if the range holds, we look at this smaller time frame, we break we break a short off the bottom of the range, and when we break a short off the bottom of the range, we try to get in long to the top of the range. Once we get into the top of the range, we lay off longs and then look for a short to the bottom of the range. Let's see here, and this is just back to let me find this. Okay, and this is just kind of re-going over everything we've done here. All right, so is this slide one? All right. So just once again, top to bottom, how do we trade? Form of bias, okay, based on the Sutton Momo, and just, you can add a little bit of your analysis in there. If we're bullish, we want to be taking longs below the mid and lower mid. If we're bullish, we're below the lower mid and the mid right now. So realistically, like, we haven't broken the range. The trade is long from these levels. It's not short. We can be in a temporary short trend, wait for the break of the confirmation, but we're still in a range. So longs below the lower mid are best. If we're bearish, bears above the mid or the upper mid are also best. So I think I'm a little bit on the neutral bias here today, going into tomorrow, because we're still that high. We're neutral unless we break lows. So if we're neutral and we're below the lower mid and below the mid, and my bias is technically still neutral unless we crack this, I'm wanting to take longs here. Now, if you see, like, if you look at today, shorts, here was the mid. Here's the upper mid. Here was the lower mid. If you took shorts above the upper mid or longs below the lower mid, safety zone. Those are the best trades. Longs below the lower mid and shorts above the upper mid in a neutral day. Those are going to be the best reward ratios. Today is still neutral unless we break this support. So we're under here. You want to be looking for, you can observe that we're in a short sequence, wait for anticipate the break, wait for the break, and then take the long. That's the best scenario for tomorrow. Where are we? Okay. Now, extreme trend days are about the only time where, like, the Momo score is kind of like irrelevant, because you can't, like, and it's less than 10% of days. There's not a ton of these days you even have to worry about where there's not going to be a setup. An extreme trend day is like tomorrow. If we just crash all day, we will be below the lower mid almost all day. And to be below the lower mid all day happens less than 10% of the time, if that. So we will almost at some point get back up to that lower mid at least. So we don't have to worry about like catching those extreme moves because they're such rare day occurrences. If you're patient and you're bullish, or you're patient, you're bearish, whatever the situation is, there's always going to be an entry that lines up with the upper or lower mid. Like in this case, even the short, the high of the pop here is at that lower mid. Now, if we do crash tomorrow down to 68.20s, we will most likely be below the lower mid until that happens. And then we'll get a rally back to it. But even if you're bearish, like if your bias is bearish here, which you can make the argument that it is, you don't want to be getting short below this level. And that's just another good rule of thumb to keep you out of extreme trades. If you are shorting below the lower mid or you are buying above the upper mid, you need to be well aware of that you are buying an extreme trend or selling an extreme trend. Because we almost always snap back to it. Like every time we've traded these supports, we're below that lower mid here, way below the lower mid. What happens is once we find that support, we snap back to it. We get below it, we find our supports, we snap back to it. We get below it, we find our supports, we snap back to it. Happens over and over again. So tomorrow, if there is the case where we do have a trend break, you will be below this lower mid, and this will just be acting as resistance all the way down. And this, what happens when we make a new low? What does the lower mid do? It makes a new low as well. And if there's a fib setup that lines up with that, like there is here, that gives you double confirmation. Okay. Okay. So the other thing you have to do every day, define your levels of support and resistance. You can get them from my trade plan. You can get them mid, lower mid, upper mid. Those are going to be levels of support and resistance. And then Perry's levels, which I hope you guys have been loading up because today they were absolutely spot the F on. This was today. This yellow line is what Perry went over in the morning for the ES, low of the day. This top side, we got a little bit above it, not much. We resistance in the morning, one peak above, and then as soon as we failed back below, we went here. So the orange and yellow lines are his most important levels. We went here, we cracked that, we went here. We found a support, we went back here. Same thing in the NASDAQ. Yellow was the options resistance level. We got a little bit above it. And as soon as we cracked below, we went straight down to the bottom. And that level is it's like a 26,025, which we're kind of below right now. So not holding that is also going to create some selling in the options market. Okay, let me go back. So steps, trade plan levels. Okay, define levels that you want to trade. From my analysis, from your own analysis, predetermined levels. We're also using indicators that are creating mathematically divisible levels. That's all these are. This mid, lower mid, upper mid, these are all just math. That's just a mathematical divisible level. And then Perry using his levels as well in combination. That'll give you levels of actionable trading ideas at the beginning of every day. Then from there, the questions to ask yourself after you've gotten in a trade to manage the position are as follows. Did we create a swing low or high after your entry? Now that's going to take 25 minutes minimum to do because a swing low, I don't define a low being a swing until it's held above that for 25 minutes or below for 25 minutes in a downtrend. Did we create a leg start, a 3-bar move? Is there an ATR expansion in the direction of the trade you took? Yes or no? Okay, these are questions you're asking yourself once you're in the trade. And was the reaction immediate? Is the market moving slow or fast? And is there upcoming major news that might be impacting market positioning? The upcoming major news that's impacting market positioning for the rest of the week forexfactory.com. I don't know if you guys have this saved, but forexfactory.com/calendar. Today was ISM, and then you have PMI, 10 o'clock on Wednesday. And then really the big one is Friday. Unemployment numbers. So this is where the market is. The market is positioning itself into that Friday move. Realistically, that's the biggest news of the week is going to be Friday morning. I don't know why it says tentative, maybe because of the shutdown. But normally it's at 8:30. So you just got to be aware of those things coming up. And yeah, so hit me with your questions because I know there's probably a few after going through all of this. Or if anybody has anything they want me to cover too, feel free. Let's take a look here. The NQ. My phone is going off. All right. There's no questions then. Okay, here we go. Here's a question. Other than being aware of Forex Factory news, do we do anything along with the data? Yeah. No. Outside of being aware of those, and then like the one thing that's not going to be on Forex Factory is going to be the bigger earnings, which are only like once a quarter, and it's basically just like Tesla, Amazon, Google, Meta, Nvidia. What are the other ones? Netflix, kind of. Those are the ones that like impact that are not going to be on Forex Factory. But other than that, we just don't know. The other thing that you can do if you want to journal is with the Forex Factory, like you can be aware of if it's a miss. So like if I don't know what the jobs numbers are even supposed to be. Usually they have like expectations or like today for ISM. So it was like a slight miss. It was at 10 a.m. What did the market do at 10 a.m. after that slight miss? It sold off. So a miss on ISM created selling pressure. So you can keep that in your notes. So if it's better than expected, next time ISM comes up, we're probably going higher. But that data, like, that's about it. You can just pay attention to the data, like in what happened the last time that data came out. Was it in line at expectations? What did the market do? Was it below expectations? What did the market do? Was it above expectations? What did the market do? That's something that you could keep that could be important to your notes. Okay. That's all I got for you here tonight. Cool. Take care, guys. I'll get this uploaded here tomorrow.